Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and reviewing oil trades from this morning. And we'll look at gold. We'll take a look at some of the other instruments and how today played out. An interesting week and a reinforcing, just sticking to basics and focusing on best trade setups. Yesterday into the close, we had spot crude closing as first red day. I'm going to review my thought process behind that, answer some questions regarding the first red day break in structure and how that trade evolved over into the new day. I want to repeat a phrase of my mentor, Peter Brandt: strong opinions weakly held. And what that means is that I can have an opinion about the market or a thesis about the market, but it doesn't mean that I hold on to that and that I'm bound by that. It means that I have a thesis about how it may evolve, but it still needs to set up. And so traders, when I comment first red day or, first green day or an inside day, traders get fixated on that and they come back and are asking me all kinds of questions. And you have to understand it's a signal day, but I still need a trade to evolve. And coming back to looking at the week, we had day one on our Monday. That also became our first green day. So the market broke out of the low of Friday, pulled back into the close and closed above the open. That became our first green day, which again is an opportunity for buy low of the day of the session if it presents. And so typically for oil, I'm looking for a U.S. session trade. There are going to be days when it moves in London or it moves in Asia. But in a large majority of cases, this market will move its largest range in the U.S. session. Doesn't always work out like that, but that is in a lot of cases how that may come. So our day one was Friday's high. That was where the peak formation started above the high of the week of the previous day before collapsing down and giving us a dump day, heading into our first green day, which is right out of the playbook. Dump day, first green day. But the market broke out and traded higher. And so as I've repeated over and over, we redraw our lines. It's still a buy low, buy low of the day, buy low of the session trading opportunity if it presents. This market formed 3 peaks before reversing and continuing the up move. So sometimes there'll be an instrument that gives us maybe a cleaner setup or a more optimal entry, or if you don't want to have the patience to sit around for that third or end of the third hour trade opportunity, you may have taken a different instrument. But the market completed that reversal and continued to go as an up day. That gave us day one breakouts in the market. Day one, day two, but day one longs in the market. Day two longs on our Wednesday in the market. Day two longs. And that market proceeded to take out the high of Friday. So again, failed breakout. The market reversed to go back to the high of Friday and went into a consolidation into the close, which worked into the high of Thursday before breaking down through the low of Wednesday, which I called our break in structure. That closed as a first red day. When it reverses and takes out the low of the day, there's a possibility that that will be the beginning of the pump and dump when the break in structure is on the inside. As I repeat, break in structure on the inside, up high, pump and dump. That's my thesis. So one of the questions I got was, well, but it broke out of the high of Thursday. Remember, first red day is a high of the day, high of the session, selling opportunity if it presents. And if we have a market that goes vertical on the breakout day, first red day, again, this market could have broke down, pumped back up into the open of the New York session, and again broke down into our close below our low of the day and rolled over potentially on Monday. So whether it took out the high of Thursday, the high of the week, is completely irrelevant. It's what type of setup do I have coming into the U.S. session. So as in the playbook, we talk about drawing our consolidation. That potentially may have been an area for the market to break down from, break-in structure on the inside would have potentially gave us a pump and dump into the U.S. session inside for a breakdown if that presented, but it went vertical. Now, I had another trader message saying that was because of Moscow's comments about oil production or anything else. News has nothing to do with anything. They can use that as a catalyst or an excuse to move the market. They already have the objective of how they're going to move this market. It's in consolidation. It goes vertical and breaks out. Now, as I said yesterday with the British pound, when a market breaks out of the high of the week, we had this example yesterday. It went vertical and broke out. News in London on British pound, it went vertical 3 levels before consolidating and breaking down and dropping. It filled that gap. We'll talk about this trade after the oil, but it's important to understand when a market goes vertical and we have that spacing, that these breakout traders are still in the money. So when I got up this morning and I saw that space and it had gone vertical, we have day 3 longs in the market. Whether we consider Thursday's breakout as day 3 longs, it's still day 3 longs in the market. My original hypothesis was that coming back to Tuesday's breakout longs, we had breakout traders in the market. This market still had the possibility of at least breaking down to not only the low of the day, but perhaps the low of Thursday. But what matters is that when I come to the screen, I still need to have a setup. So some other comments from traders were because it took out the high of the week, doesn't that mean it's a reset and all those things? You don't have anything that can be anything until the day closes. So that's the important thing to remember. We have a break-in structure, we have a pump, pump, pump. But in the beginning of the New York session, the thesis was the possibility that this could break down, pump up a little bit, and continue to collapse. So we'll talk about that trade. This market had broken out of the high of Thursday. Now, if we come back and just measure the distance from that breakout, we have 50, 50, and 50. So when I come to the screen, this market has already gone 3 levels of rise. I mark off my high bull level, which is at 75. So the high bull candle wick is, for me, at 75. The last peak formation before breaking down is at 75. You'll notice again they partially broke out of the 100 pip box before collapsing below the high bull candle. 75 to 100 pips here possible depending on where the market would pump and dump from. Now I'm going to use the 5-minute chart. I entered in on the 1 minute, but I'm going to show both entries because our universal playbook entry gave traders the opportunity to enter in just as the market was opening for the collapse down. Now you have to understand this market was already broken down. A lot of traders messaged me and said, I didn't see the pump. London is the pump itself. Pump, 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 break in structure, pump, 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 collapse, engulfment, and the collapse into the open of the session. Remember, nobody gets a free lunch. The market had already pumped up. The beginning of the session is the dump. This was an easy blow-off move. Several traders nailed this trade. And the thing to remember is that when this market goes vertical, you're going to see this. We're at the high of the week, the high of the month, the high of the day, and we have a space from where the market went vertical. Now, also, this is not a trend. This explosive move is not a trend. That's a vertical move. It is not a trend. So understanding that if this market was trending and went vertical, that's different. This market was in consolidation and blew through the high of the week. That can be construed as a stop hunt, peak formation, level 3 blow off, whatever traders want to call it. But we have the spacing, a 75 pip spacing for this market to collapse through. We have a death line at 50 for this market to collapse through. We've already broken down. We're already inside of our universal entry criteria. This market was ripe with a descending triangle to blow off vertically into that breakout. Now, I was optimistic that we were going to get a follow through, and I'll show that second entry for a continuation down through that initial low. I felt that they were trapping counter trend traders at the high of that breakout, and again, my fundamental belief would be that these breakout traders still needed to be punished a bit more, possibly at least back into the breakout of the consolidation from the rectangle in the London session. So in a 1 minute scenario, we can see this is just an absolutely clean gift, front side, back side. The market was collapsing into the open. This gave us an opportunity to scale into this and nail and bail and grab 75 pips with zero stress and virtually be done before the session even started trading. Now, I decided to take the second entry. Again, I had a peak formation that broke down. We had a lower high, lower low at the end of the hour. So the second hour open, the New York NYMEX market opens. We have a breakdown inside. That breakdown inside of our lower high, lower low is the formula for the pump and dump. And we'll zoom in on this, which is why I re-entered into this trade when we broke down through the lower low. I positioned myself again into that market looking for the collapse down through the low. When the market auctioned back and forth and we had that consolidation, I went to break even because, again, my thesis, as we all know, is that this market should blow off vertically fast. It should not hesitate. It pumped up and took me out. It did collapse back down again, but I was already out of the trade at that point. Decided to leave this because we now have volume potentially getting trapped inside of that peak formation low from the first hour. So my two trades were the short and then the follow-through short, which was a break-even trade. Afterwards, I didn't even look at this market. I still am not convinced. Now, if this market does close as a green day, this I have no idea what it can do. We're heading into the weekend. This could gap on Monday. It could keep going higher. And then, indeed, if this closes up, we could consider this volume below Thursday's high now as a possible reset for a day one count heading into our new week. But understand, until this day closes, we don't know that this could be a reset into the new week, because this could have collapsed down, pumped again, and broke down through our low of the day, heading into our Monday to roll over and possibly go back to our breakout traders from Tuesday morning. But again, all this was a pump and a dump into the open. The follow-through failed. I don't know if traders went long or did anything else. No idea. I wasn't going to sit in this. I was easy money in the first hour. But that's it. We had a break in structure. That typically will be the beginning of our pump and dump. Still no idea how this will pan out. If this market was to break down on Monday as a failed breakout, no doubt Thursday's low will be the target. If they trade back into that low and continue on Monday, Tuesday, we will obviously probably retest the high of Friday for a continuation of a new 3-day cycle. Then we could indeed call this a reset. But I will repeat, if you see a breakout at the high of the week, the high of the month, high of the day, heading into a session with a space, just as we saw yesterday on the British pound, this is going to be free money. Remember, no major red news heading into the open of the session. There's 2 hours before major red news. We have volume trapped up high. We have a nice little descending triangle for the collapse down. The collapse down back into breakout traders who are in the money. Now, my next post was on gold. We had day one yesterday on Thursday that broke out of the high of the week and then collapsed, making a first red day. Some traders took advantage of that first red day sell-off in the Asian session. And then the market went vertical from the low of the day in Asia into the London Open to take out that lower high from the Asian session and then collapse back down. And we had 3 levels of rise, 150 pips. So we had 3 levels of 50, 50, and 50. And that market then went into consolidation. Now, there were 2 thought processes happening here. We had day one, or the high of our week, our failed breakout. So this was day 2. We had a breakout of the low of the day, and some traders said to me, again, doesn't that restart the day count? Remember, the day is still trading. This is day 2. This is day 2. So until this day closes, this market could have easily rolled back down to the low of the day. We could have popped the high of our middle box, got traders chasing this long. And if you get caught long up here, guess what happens if they pull the floor out? it had a lot of space to drop down, which several traders capitalized on today. Didn't move as fast or as furious as I expected, but this market, the understanding was that this spacing back to our breakout from the low of the Asian day had an easy 50, 75 pips, depending on where this market collapsed from, if they got people caught long buying at the top of this box, which would be a stop hunt into shorts from the London session. So, and as one other trader mentioned, could this be a day zero setup? Absolutely, this could be a day zero setup. But the key thing to remember was that today it is day 2. We're heading into the end of the week. We have breakout traders in the market at the low of Thursday. We've made a peak formation low and a peak formation high. We have our low bear and our high bull locked in. But what really sort of, again, kept me watching this was to see if they would trap longs into the peak formation and then pull the floor out, because my experience with gold is that they often will do this. We had the prelim U of M, but again, I expected this to actually fall back to the low of the week. Not an underlying overall bias, but it just was something that I would expect to see from gold. But the length of time that this took for the pump and then the dump, and the several traders have asked, how do you know when to exit trades? Well, this is a great question, but the longer you trade, the more you should recognize that the longer the market takes to auction through a level, the more likely that move is over. A market that's going to go and break down will happen very quickly, as we saw on oil and as we experienced with gold. When it's going to go. So the longer that this took, the more suspicious I became that they were actually going to be just trapping volume inside of the two peak formations. So heading into Monday, this will be interesting again to see how this market sets up or opens up on Monday. We have a day 1 up high. We could see this market set up for a reversal back up to the high of the week, or we could see this market again trade up. Peak form, it's a doji. We've essentially going to have a close as a doji day. We could still trading between these two peak formations. This could end up becoming a day 0 setup for an explosive move, depending which direction it comes out of that consolidation. So peak formation high, peak formation low, consolidation did not eventuate today. Keep your eyes on this market, because when it comes out of this, it could have a large explosive move. So coming back to the British pound, yesterday we had the all session fade that broke down, and I mentioned that market possibly had room to retest maybe the low of the day. I didn't know. But when we come back to today's session, we had peak formation highs made in the London session. So we had a consolidation peak formation in the US session that was just above the quarter level. They pumped up to that before pulling back. They went vertical in the London session again and engulfed at 25. That engulfment at 25 broke structure when it shorted down through the low of the day. Break in structure on the inside is the formula for the pump and dump. We had the prelim U of M report at 10 a.m. New York. The market on the New York Open pumped up into that London short before breaking down again on the inside. They pumped it up into our engulfment high bull for the short trade at double zeros, back down to 50, taking out the low of our Thursday. So again, following things through often pays big dividends. We tend to forget about an opportunity. And as I mentioned, the follow through gave traders an easy 50 pips after the news, break in structure internally, pump and dump above double zeros for the move back down. So important to follow through. This market broke out and failed. It went into consolidation. They worked the high. They worked the high. They worked up into the high again before breaking structure. Major red news, U of M prelim. Didn't really have any explosive movement, but we had a pump and dump for 50 pips after the news in the New York session. I have no idea what the major red news is going to do. We could say, oh, prelim U of M doesn't do anything. Next month it could explode for 100 pips. So I always emphasize caution. I respect the market. I wait for after the news if we're going to trade something. We have 2 hours. First hour opportunity came on oil. That was an easy nail and bail opportunity for the blow off move that was over. It should explode and move fast. Those trades should not hang around, just like the pound did here. Once the markets digested the data, we have nothing left on the schedule except to trade. I will trade this as normal. We had the pump and dump for the collapse down through the low of Thursday. Remember, failed breakout. That failed breakout, and we talked about this. I said if this market was to break down, it will be targeting the lows of Thursday. So stick with your plan, stick with your thesis, study these charts. Know what an easy setup looks like. Know when to wait for the news. Keep it simple. Rinse and repeat. Focus on the easy money. I cannot emphasize that enough. I repeat the same stuff because everything is either a pump and a dump or a dump and a pump. And after the oil trade, I just shut it down for the day. I went back to see how the pound played out. I went back to look how gold played out. I didn't show that gold trade. Several traders shorted the gold trade after the news. The pump and dump again up to 50 into the peak formation. So first hour made a high. They broke structure on the inside. They pumped it up on the news. We had short universal entry criteria met at the quarter level. Some traders got in at 50, but on the 5 minute, I had a trader, great point, said I've taken too many trades on the 1 minute. Can you focus on the 5 minute? Let me just explain. The only reason you're getting chopped up on the 1 minute is that you are getting in on the front side of the move. So there's no difference when you have an entry met, the entry criteria met, you're on the back side of the move. We are already on the back side of this move. We have lower highs and lower lows. We're on the back side. We need to wait for the news. The 5 minute system got traders in above the quarter level for a 50 pip move. If you were trading on the 1 minute chart, we had lower highs, lower lows. Lower highs, lower lows. The news pumped it up. Engulfment, collapse below 50 for the move back down. There was opportunities to enter in with additional positions to scale in. Again, I would sell the pump ups on the way down. Some of this could be taken off, leave the trailers for the follow through back through the low if this market still had the thesis that it could go vertically through down into the low of the Asian session. So focus on simplicity. Everything is a pump and dump or a dump and pump. Timings, levels, manage your risk, lock in profits, call it a day. When we have a market that's trading this slow and back and forth, take the money, shut it down, come back Monday and look for another best trade setup. So keep it simple, traders. Congratulations to a lot of traders. I know that some traders are struggling, and I know that other traders are making leaps and bounds in their trading business, and it's only going to continue. This was I wouldn't say a challenging week, but every week we'll have a different template, which is why I come back to understanding the opening range, the initial balance, the day count, and understanding where breakout traders are in the market and when they are caught, high week, low week opportunities, and then your 3 sessions, 3 levels of rise. Keep it simple, traders. Next week's going to be bigger and better, 1% better every day. Keep growing your trading business, and may the markets go with you.